Okay, you're with Smart Money on Bloomberg UTV. We're always brimming with investment advice, and we're looking at all the emails that you send us and trying and factoring in all the news to tell you exactly where you should be parking your money for the long term so you can build wealth. To answer some of the questions that are coming in the insurance space, this is a special on insurance of Smart Money. Our friend here, Deepak Yohannan of MyInsuranceClub.com is going to help us. Deepak, good to have you on the show. Now, we've often been getting a lot of questions from our viewers. Today, we've got this one from 27-year-old Pravesh from Hyderabad. Now, Pravesh wants to take a pure term insurance cover of 1 crore rupees for 25 to 30 years. This is what his requirement is. The first thing he wants to know is that since he wants so much cover, yes, is it better to take 2 different life insurance policies from 2 different vendors, just to ensure that even if he defaults on one policy, he will always have another one to go to as a backup. So do you think in the first place, is that a good idea?
It's a great thought that he's thought of this plan. The only disadvantage to it is the fact that you might have to pay a higher premium, because as the sum assured increases, you get a sum assured rebate. So when you move from a 50 lakhs to a 60 lakhs, the proportionate increase of premium is always lesser.
Right.
So if you're buying 250 lakh policies, the premiums would be slightly higher, but it's definitely something which he should do, because, you know, in case 5 years from now there's an inability to pay the premium of one policy, at least 50 lakhs is active and run.
Fair enough. We were just talking to Sanjeev a while ago about single premium products. Do you think it is apt for someone like him? Because we were talking about tax implications too. Does it work out for someone like him?
It's good for a cash-rich person who's not interested in the tax angle. Otherwise, it doesn't make sense even from a financial angle, because let's take the worst case scenario, something happens to him next year. So he's paid the entire premium amount, while a person who's been paying an annual premium actually pays only maybe, 1/10th, 1/25th of what he's actually have to pay.
All right. There's also this concept of online term insurance. Now, is that a good way to go? What are the advantages and the demerits of this too?
It's dirt cheap. So there really isn't any demerit to it.
Okay.
It's really, really cheap. Sometimes it baffles me how it can be so cheap. The only disadvantage is in terms of, as he's mentioned, some riders are not available.
That's right. He's mentioned that in his list of questions as well. So there aren't riders available. Is this true?
The very fact that it's an online policy, it is an auto underwritten policy. So I will never do a medical test on you for a certain amount of policy, sum assured. In fact, ICICI iProtect has accidental death benefit attached to it, to a sum assured of 50 lakhs. So if he wants to take an accidental death benefit, he can go for it. But at such low premiums, it's tough to offer you a critical illness benefit, etc., which most of the companies are trying to sell it through an online medium, which is over-the-counter product, very easy to understand, doesn't have too much of clauses attached onto it, hence the price is so low.
So some of these riders are actually very good and you don't want to miss out on those. How exactly can you do that if you're buying online?
In the case of Pravesh, buy online, the only option that is available is accidental death benefit, which iProtect offers. iTerm from Aegon does not offer that option. So maybe, go offline, take one online, have it dirt cheap, go for the other way, which is offline, and pay a little higher premium.
All right. It's slightly a bit of, a push and pull situation over there. But if you're looking for the right product and the right mix, then perhaps that's what you want to do. But what factors, very quickly, if you can tell us, should be looked at when one is in the market for a term plan?
Term plan, going for the highest amount, that's it, at the youngest possible age. The older you become, the more expensive the premiums become. So at the age of 25, he's thinking of a 1 crore policy, great.
That's great, isn't it?
I think that is the only thing which you should
consider. We need to laud you, Pravesh, for doing this and for helping other viewers as well, getting started on their insurance and planning it out just the way you are. Thank you so much for joining us, Deepak, with your ideas on insurance. Whatever questions you have, we'll pipe them across to Deepak and he'll answer them for you. Write into us at our email ID, smartmoney@utvmoney.com. We'll take a small breather, but we'll return with more action on the flip side. Thank you so much for joining us. Bye-bye.